so I didn't miss anything. All right. Right, give me 1 second. I'm gonna just open up a little chat on the side here. What's going on? All right. Okay. There we go. All right, you guys still have a copy? Yeah. I have one spare copy, right, for when I come? Yeah. All right, cool. So let me just jump in one time now, guys. All right, so morning, everybody. I'm gonna see if I can finish this tea real quick. And this nasal condition ain't going on too long now. Joey, morning, Joey. We're good. Here's to Leo. Yeah, that was my band boy. Yeah, play with them for how many years? 8 years? Out of the 12 up there? Yeah. Morning to Leo, how are you doing? Good to have you on. Hope exams have been going well for you. Kenya, so when is maths paper one? Kenya, that's a good question. Let me pull up my schedule. I was trying to work on this. This is here. I was trying to work on this morning. So right now we are. Hold on, let me zoom in a little bit. Right. Oh, here's Yuri. It's afternoon already. I didn't realize that. Right. We just come in there. Yuri, morning. How are you going? All right. Somebody asked about maths paper one just now. Trying to. Right. Okay. So we are here Saturday, 17th of May, right? Monday. So not next week. All right. I'm actually trying to start the weekend, so like in 2 weeks, right? Because the sandwichy maths and a bunch of other, well, at the end of a set of other multiple choices. So I have them kind of peppered in there, but I know people, of course, have English to do. People have GO1, TD to do. Some of my students have Art Maths and Bio to do. HSB and French and Chem. I know some of y'all have to do too. So I'm not going to force the point, right? So I might put and I think the 30th is a public holiday in Trinidad, right? So I have no plans to go anywhere for the long weekend or whatever the case is. So I mightn't have class that day, but probably maybe one class on the Saturday. Mishka handling the Art Maths unless she asks me to do that. So yeah, basically, if once she's handling the Art Maths, I'll do a 10 to 12 here. If I could do on the Sunday, I'll do on the Sunday. Right? Even if it's in the afternoon, like 4 to 6. And then from the Monday, I want to try and have 2 sessions daily, if possible. Even if you only get 1 session in, that's fine. I'm hoping for a double session the day before the exam, and maybe even the day before English, right? So, of course, if you want to practice your English multiple choice, you're very welcome to do so. Yeah? I mean, I can't help you with it, unfortunately, right? But yeah, so in possibly 2 weeks, the maths will start. Anyhow, we're looking at accounts today. So, folks, I mistakenly said yesterday that we will do the Jan 2025 on Monday. I don't have the Jan 2025 paper one. I have Jan 2024 and May 2024. So today, we're doing Jan 2023, and then Monday, we'll do Jan 2024 and May 2024. Right. Good evening, morning, how you doing? Right. So, of course, if anybody happens to get the Jan 2025 somewhere, somehow, please feel free, 1, 2, 3, 4, 5, 6, 7, 8. Who am I missing? Oh, I have 9 and it's only 1. No, 1, 2, 3, 4, 5, 6. Okay, cool. Right, yeah. All right, so I'm gonna. Oh, that's good again. On the side, right? Jan 2023. I thought I had Jan 2025, but that was the maths paper one. All right, there guys. I'm just gonna put a copy of this one to print real quick. So in case anybody else shows up, they won't have to wait for a copy, right? Okay, and with that said, I think it's time to starting, all right? Sorry, I know seeing my YouTube. Lexi, good morning. Preeti, hi teacher, morning Preeti. Sharicia. Did do so well. Sharicia, I think plenty of people have a little thing about the paper too. Morning, Shanice, Nikel. You have Jan 2025. Really? You paper 1, Nikel? All right, Nikel. If you would be willing to share it, I would be willing to do it. And when you email me, we can talk about how I would be very grateful. I'm still my own name. Right, email me now. We can discuss there, and if that's the case and you have it, my thank you to you would be for you to join my class for free for that day. All right, for the 2 sessions, the Jan 2025 and May 2024. That would be my thank you to you. I would appreciate it very much. Okay, cool. Live visibility. Though live is not eligible for recommendation, search. It is unoriginal reproduced content. Oh, okay, no problem. Okay, so let's put that down then. Okay, yeah, folks. So, Preeti. Oh, thank you very much, Preeti. Appreciate that. Right. Kenya, June 6th. Right. All right, folks, any fast? Are you all ready for me? Yeah. All right, Google me. Just give me a quick G if you guys ready for me there. Ready to start. Yeah? All right, cool. Okay, so folks, what we're doing is as follows, right? So we're doing today the Jan 2023. How we are doing it is we are doing what is visible on the screen at any point in time. I found that yesterday it kind of saved some time. All right, what if I didn't put NBV in my balance sheet because I forgot I would receive marks? Hidden? That's one hidden in the whole thing? I don't think that would cost you too much. Luke, they have never said. The examining body has never said what the percentage is, and I do not know. All right. Anyhow, let's start here. Okay. So again, we're going to be going through at a kind of medium plus pace. I will slow down for anybody who needs me to do so. If you have any questions at any point in time, please feel free to let me know. Right. So this is not just about me blazing through a paper. It's for you all to understand how to do it because you all will be the ones in the exam room on Tuesday. Right. Hey, Nikhil, thanks very much. Yeah, Christmas present here, boy. All right, okay. All right, so here what we're going to do. Jan 2023 today. On Monday, we'll do, I'll see if you can get 3 papers on Monday then. All right, maybe I'll do an earlier session, 1 to 3 or something, but we'll figure it out. Okay, thanks very much. All right, cool. Right. So let's go. The main internal users of accounting information are managers, right? Competitors, local communities, and government agencies, none of those options are internal. Those are all external. So none of them could even be thought of as possible, right? Now, folks, if you all have any sessions in school that you're all doing, whatever the case is, and you all see any weird answers, let me know, because I have a Cape accounting student yesterday, like they were in school in the morning and doing some stuff with the teacher and getting some weird answers, right? Like they had this one question. You remember like in absorption costing, you need to have a basis of apportionment like labor or capital. The teacher put a number of complaints. Yeah, so I messaged my teacher and I said, I'm missing something here. He's like, boy, if you missing it, I'm missing it too. Anyhow, enough of that. Which of the following terms describes the exchange of goods and services? Well, anybody? Transaction, very good, right? Lovely, lovely, lovely. Ooh, Janice. Right, Monday, what time? Monday, 4 to 6, half 6 to half 8. I might do a 1 to 3 if I have any extra time, right? Okay, which of the following lists contain asset accounts only? Well, the first 2 out because capital is not capital. Capital provides assets, but is not itself an asset. Cash, inventory, furniture, and motor vehicle, boom, item is C, right? And D, the bank overdraft is a liability. All right, Geneva. All right, sorry, Geneva, my bad. Right. Okay, guys. So again, we'll do 5, 6, and 7 and scroll along and check off 4 on it. Into which of the following accounts is the difference entered when the trial balance fails to agree? Anybody there? That's number 5. Suspense account, yeah? When the trial balance fails to agree, we open a suspense account for the difference. We then try to find the errors that cause the difference or the disagreement and then correct them. Number 6, which of the following represents the correct statement of financial budget equation for calculating the value of assets? Well, if it have assets in the equation, it can be that one. So A and B automatically out. And do we ever subtract liabilities from capital? Not as far as I know. So the answer here is D. All right, R. Stevens, boy, Mr. Steven, right. A petty cashier received a float of 350. He spends 320 out of this and requests that his float be increased to 400. If his request is granted, how much will he receive? Right, so check it. If you ignore the second piece and you say, okay, he got a float to 350 and he spent 320, then the reimbursement would simply be 320, right? Now, let's write this down. I don't want to talk up in the air with figures, right? You receive 350 and you spend 320. So if you spend 320 or 350, how much you have left? $30, right? Now, if the request to increase the float to 400 is granted, it means you need to get an amount to go from 30 to 400. And how do we calculate that? We'll simply subtract and we'll get 370. That's option C. Okay, so now we'll scroll down and tackle 4 and 8. All right. Oh, here's Noah. Lexi, that's correct. Very good. Everybody who trying, good job. Even if you get it wrong, that's not a problem. We're here to learn. Morning, Noah. How are you doing? Good to have you on. Yes, yes. All right, cool. You know, we're doing the Jan 2023 paper 1. This is the first page. You haven't missed too much. The questions here are relatively simple. Right? So we're now finishing off page 1 here. All right. Of course, if you have any questions, please feel free to ask. That's not a problem. Whoops, I opened the wrong file there. You want wrong window. Comments there. Okay, rent expense. So number 4, guys, bottom left-hand side. Rent expense, which is still owing at the end of a period, must be debited in the profit and loss and shown in the statement of financial position as a liability. Which accounting concept does this represent? Accruals. Right? So if you have an amount still owing, when they say debited to the profit, so once again, they're doing something here which I don't agree with, which is using old terminology like profit and loss when they've replaced that since like 2013, 2014 with income statement, right? So when they say debited to the profit and loss, they mean charged as an expense. So that's the thing. How do we adjust for accruals normally? We add it, right? We add which means we're including the portion that is unpaid in the income statement. Why? Because according to the accruals concept, whatever is incurred must be taken into consideration, regardless of if it is actually paid or not. All right? So there's the accruals concept. And number 8, any expenditure which is written off entirely to the income statement is known as revenue expenditure, right? Capital expenditure we saw, I think, yesterday. That's any expenditure to acquire new non-current assets or to significantly improve the value of non-current assets. So for example, like the printer that I was in the corner with you guys, when I bought that printer, the money spent on the printer was capital expenditure, right? And I bought it in 2014, so that printer is 11 years old. And about 4 years ago, I had to replace a part inside of it that cost about 3,000 and change, or 4,000 and change, which was more than I paid for the printer, right? So without that part, it could not work, right? So that kind of expenditure is also not just repairs, right? So will we see any of these questions repeated Tuesday? It is likely. I don't know which ones per se, to tell you which ones next week, but that's what we're doing about 4 or 5 papers. So you guys have a nice sample from which to choose, right? Ideally, I would do 8 or 10 years worth, right? But that's a bit of overkill, but you know, yeah. All right. Okay, ladies and gents in the class, are we okay with page 1? All right, my Google Meet people. Right, and just so Ayaz, Jordan, Marcus, Noah, Talia, Valentino, and Yuri, if you guys are good with what's on the screen, just kindly give me a quick Genie chat, please and thanks. Right. If you need me to re-explain it, give me a R. Right. So you need me to re-explain any, many, or everything. Right, give me a R and give me the number or numbers. Okay, all right, let's see any G's coming. Right, let's go. Next page. Okay. I want to say we saw this one yesterday, but I don't think it's this one. So item 9 refers to the following information as shown in a cash account. Okay. How do we classify cash, ladies and gents? Cash is an asset, right? Assets have what kind of debit balance, right? Sharice here, yeah, first and only class today. Yeah, we had one yesterday, 4 to 6, and then we have 2 more on Monday, 4 to 6 and half 6 to half 8. possibly a 1 to 3, but I had to clear that with the bosses. Right, so as you can see, we have a regular opening balance on the debit side. We have some inflows, money coming from sales, and then we have some out. Now, they didn't label any of these, but these are simply outflows, payments we make from cash. And the balance 405 is what we have left, right? Which of the following figures will be posted in the trial balance? Yeah, guys, what do you think here? Which of these figures will go in the trial balance? Yeah, the one mark balance, 405. There you go. Right, there we go. 10, 11, 12. All right, 10. Which of the following ratios tests the liquidity of the business? That's the asset test ratio, option A. All right. Right. YouTube, let me just tell you something real quick. It have a delay about between a 7 and 10-second delay between when you'll see what I do or when I actually did it. So if you'll put a comment and I don't respond right away, it's not because I don't like all this, because there's a delay. All right. Right. Number 11. Janice purchased 20 items at $10 each, receiving a 5% trade discount. 1 month later, she paid her bill by check, taking advantage of a 10% cash discount. Okay, let's go on inside. Which of the following would Janice have to pay if she missed the discount period? Okay, so they put extra information to kind of throw you off here, right? But we know what to do. We're smarter than this. So she bought 20 items at $10 each. That is a total amount due of $200. But she received a 5% trade discount. Now, trade discount is not recorded in the books of account. It is simply deducted on the invoice, and the net figure, right, is put in the, the books. Now, 5% is 1/20th. 1/20th of 200 is 10. So 200 minus 10 is 190. Sorry, that looks like 196. My apologies. Right. Now, they give us some information about the 10% cash discount, but they're asking us here, which of the following would she have to pay if she missed the discount? Oh, lovely. All right, so that's 190. 190, right? If they were asking what amount would she pay with the discount, that would be option A, because you would find 10% of 190, which is 19, and then subtract it from the 190. All right, cool. Yeah, the trade discount. Yeah, your man will be right. Okay. Number 12, an example of capital expenditure. So I just talked about this in the previous page, and this was in the May 2023 paper as well, right? Right. Pretty, it would only be A if you had to pay the discount. Sorry, if you took out the discount. That's correct. Right. Capital expenditures, money spent to acquire new non-current assets or to significantly improve the value of existing non-current assets. So rent, wages, and goods are themselves not non-current. Those are all revenue expenditure items. New building, right? Like we have a new pope, right? Okay. Item 13 refers to the following information, right? For the sole trader for the month of April. Okay, cool. Let's see. So we have purchases, we have sales. Okay, using the LIFO method, closing inventory will be valued at. Okay, so let's do this. So you bought 200 units on the 5th of April, and you bought 600 more. So you have a total of 800, right? And then on the 12th and 17th, you sold 100 each, which means you sold 200. Now, under LIFO, you would sell from the last batch first, right? Now, that batch has 600 units, which is enough to cover the sale of 200 and still have 400 left. So the batch from the 5th, which is 200 grams at $6 per gram, was untouched. The 600 gram batch, you had to pull 200 out of that, and you have 400 left at $3 per gram. So 2 by 600 is itself 1,200, and 4 by 3 is also 1,200. The sum of the two is 2,400. Oh, all right, cool, no problems. Yes, no, I'll try now. Right. Okay, cool. Okay, so we have two sets of purchases, one on the 5th of April, one on the 10th. We bought 200 grams on the 5th, 600 on the 10th. The total number, therefore, is 800. Right? Now, that's not actually relevant, but I like my totals. All right. Now, On the 12th and 17th, we each sold 100 grams, which means we sold 200 in total. So it said using LIFO, right, what would closing inventory be valued at? Why am I trying to? Okay, right, there you go. So under LIFO, which means last in, first out, last in, first out, we sell from the batches of stock in the reverse order. So this was the first batch and then the second batch. So under LIFO, we sell from batch 2 first and then batch 1. Right. So we sold 200 units in total. And under LIFO, we would sell from this batch first because it came in last. And again, last in, first out. So when we sell in 200 from that batch, right? So if you had 600 grams in that batch and you sold 200, you have 400 grams left, right? Now the first batch, batch 1, was untouched because we were able to sell the entire 200, right? As in sell this 200 from the batch of 600 and still have 400 left, right? So what you have left is the first batch, which was untouched, and you have 400 left from the second batch. 200 by 6 is 1200. 400 by 3 is 1200. And the sum of those two is 2400. Right? So that's option. Well, that's what they said here. Sales. See? Sales. All right, cool. So hope that helps. Okay. All right, that's it for this page, guys. So in class, people, are we okay with 9 to 13? Yeah. All right. Google me, just give me a quick G if you guys are good with this batch. Jovi was kind of confused. Again, okay. And she said, okay, good, lovely. Thank you very much. Hey guys, no one's kind of acted up on this. Sorry, let me get my tissue because I got an issue. Okay, lovely. Let's go again then. Page 14. Okay, let's go. The most accurate description of a trade discount is that it is offered as an incentive for early payment. No, that item A, that is cash discount. All right. Item B, given on the basis of bulk purchase. Yes. Right. So your trade discount is given to encourage buying more. Right. So you pay a lower average cost. So like if you buy one, you gotta pay it's $6 for one, but $10 for two. Right. So you buy more, you pay a lower average price. Okay. The gross profit of a firm is 7,200. Bad debts is 200. Insurance paid is 1,240, which includes a prepayment of 40. Okay, cool. What is the net profit of the firm? So as we know, net profit is gross profit minus expenses, right? So the gross profit is 7,200. Bad debts is 200. Now you paid 1,240 and you have a prepayment of 40. What do we do, or how do we adjust rather for prepaid items, guys? Do we add or subtract them? We subtract. So we have to take the 1,240, take out the 40, and have 1,200 left. So you're going to minus 1,200 here as well, right? So 7,200 minus 200, so that's going to give us 7,000. And when you minus 12 from that, you're going to get 5,800. Okay. Okay. Next. Oh, I think I had a question mark on this one. Let me see. A trader had an opening capital of 3,009. His drawings was 900. His closing cap was 4. Okay, no. This is fine. So your opening capital was 3,009. You had drawing. And what is drawing? That's when the owner takes out. Correct. All right. So that's going to decrease the owner's capital. So the owner had 3,000 left thereafter. And then even after that, right, the closing capital balance is 4,860. Is 4,860 more or less than 3,000? It's more, right? And how does the owner increase capital? Either by putting in more or by earning profit. So net profit is what would cause capital to increase. So how will we find net profit here? We'd subtract. You take your 4,860 and minus your 3,000 and get 1,860. Okay, right. So that's option C. Okay. Right. Right, cool. On here now. All right, so again, we'll do the stuff that's visible and then scroll down and tackle the stuff that wasn't visible before, right? So it's kind of a little bit out of sequence, but you can leave a couple of spaces and come back to it, right? Sorry. Right, item 18 refers to the following information. So you have a bank account, you have an opening balance on the debit side, which implies a regular bank balance. So you have money in the bank. You had some sales coming in and you spent 15,000 in purchases. Which of the following amounts is the closing balance of the bank account? So 20 and 22. Sorry, 20 and 2 is 22,000. That's how much money you have. And if you spend 15,000, the final how much you have left is simply subtract. So you take your 22,000 coming in, minus your 15,000 going out, and you're going to have 7,000. Boom. Can I go over 16? Sorry. Right. Okay. 16. Let's take a look at the 16 again. So actually, can you just give me a minute, Geneva? I want to do 19 and I'll scroll along and do 16, 17, and 20, right? The book of original entry used to record the purchase of a non-current asset on credit is the general journal. The sales day book is the sales journal. That's used to record only credit sales. Purchases book is the purchases journal used to record only credit purchases of stock. And of course, the petty cash book is for petty cash transactions. So the purchase or sale of a non-current asset on credit could only go in the general journal. All right. Okay, so somebody asked for number 16 again. And has a little short circuit, so the erasing doesn't happen right away. Right. Yeah. Well, 16 was repeated yesterday too. 17 too, 18 too. Right. A trader had an opening capital of 3,900. His drawings was 900. So drawings is when the owner takes out capital. So drawings would reduce the balance of capital. Right? And his closing capital was 4,860. So you're missing a figure here that would cause your capital to increase, and that figure is your net profit, right? And to find the net profit, you'd simply find the difference. How much do I need to increase from 3,000 to 4,860? Right? And the difference there is simply 1,860. So I hope that helps, Geneva. Right? Go over 15. Okay. Right. The gross profit of a firm is 7,200. Bad debts is 200. Insurance paid is 1,240. Right? What is the sorry, and it includes a prepayment of 40. What is the net profit? So net profit is the gross profit minus the expenses, right? Now, bad debts and insurance are both expenses. So you line up. So this is your gross profit here, right? This is your bad debts, and this is your insurance here. Now, the other trick you had to remember here is that the insurance, right, as the insurance paid is 1,240, right? And you have a prepayment of 40. You have to subtract the prepayment from the amount paid to find the amount you were supposed to pay, the amount incurred. All right. And then when you subtract your expenses from your gross profit, you get 5,800, and that's your net profit. Right. Okay. Cool. Right. So Geneva, that's all right. Okay. Yeah. Let's knock out the last two here real quick. Right. Which of the following list of activities shows the correct order of the stages in the accounting cycle before final account? Right. So the first thing is journals. Right. Normally it should be source transactions giving rise to source documents, but journals, fine. Original entry. So that's either B or C. Now, after you journalize, you have to post the ledger. Right. So that's option B. And then you'll do your trial balance. Well, that's what we're doing now. Prepayment would be asset. That's correct, yeah. 20 is C or journal. Let's see. 20 is C. All right, which of the following documents is a book of prime entry? C, yeah. That's the only journal there. All right. Okay, so I'll ask a question now. Do you guys have any questions on what's on this page? You want to go over any of them? Right, prime entry is also called original entry. That's when you journalize it, right? Your invoice is a source document. Your ledger is a book of T accounts, which is only populated after you journalize, and your statement of final position is, well, that's your balance sheet. So sales journal, that's your sales, well, your book of prime entry for credit sales. All right. All right, now are we okay? All right, cool. All right, Google Meet, you guys know the drill. If you guys good with those questions, just kind of give me a quick G in the chat. If you need me to re-explain any, many, or all, give me a R and give me the number or numbers. We know the drill. Okay, cool. 5, 6. Okay, cool. Right, one more person gonna say something, but we'll let them say in their own time. Okay, going again. Item 21 refers to the information given in the following table about Ray's Pet Shop. So opening inventory, closing inventory, sales, purchases, selling, and admin. Okay, they want what? Net profit. Okay, so net profit is your gross profit minus your expenses. So to find gross profit, right, we need sales minus the cost of sales, right? And to find your cost of sales, I see an opening inventory, purchases, and closing inventory, right? So what we'll do is we'll start there. So your opening inventory is 500, yeah? You're gonna add purchases, 850, and then minus the closing stock, right? So we have opening stock plus purchases minus your closing stock. So that's gonna give us 1,000, right? As the cost of sales or cost of goods sold. Sorry, I'm trying to erase this thing here, and the tip of this, I think maybe the erasing function is dead. Right, okay, so this here is your cost of sales or cost of goods sold. Then we will take the 2,500 in sales and minus the 1,000 in cost of sales, and that's going to give us our gross profit. And then we have some expenses. We have selling and admin expenses to take away. So we'll take the 1,500 gross profit. If we add these two together, you're going to get 300. 1,200. Right, so there you go. That's the net profit of the firm. 1,200. Oh, thank you, Preeti. All right. It's good. Lovely. All right. Sorry, starting to see a little already refreshing dance. I'm trying, boy. See a little blurry. Give me the glasses on. All right. Okay, I see clear here. Let's go. All right, 22. During the year, the company bought stationery for 220 and used 120 worth of it. What figure will be posted to the profit and loss account income statement to represent the expenditure for stationery? Right. This would catch plenty of people because it's not something we cover often in class. If we bought 220 worth, but we used up 120, it means we have 100 left, right? Now that 100 is like a closing stock for stationery supplies. That would go on your balance sheet. This 120 here is what was used up. And what was used up, right, gives us the expenditure figure. Right. So 120 is the amount for stationery expense. Okay. In order to avoid writing numerous checks for small amounts, a firm may set up a petty cash flow. Right. 25. Yeah, we'll scroll down and do 23 and 26. Just getting all the stuff on the screen, the visible stuff there. Item 25 refers to the following information in the table below. Right, so we have that. What do they want? Current ratio. Okay, so current ratio is current assets divided by current liabilities. So closing inventory is an asset, as is receivables, as is cash at bank. Sales is neither asset nor liability, nor is purchases, and accounts payable is a liability. Okay, cool. So we're going to add up these three. That's going to give us 4,000, right? 300 and 1,700 is 2,000. 2,000 plus 2,000 is 4,000. And you have a 1,000. So, right, so if you divide 4,000 by 1,000, you're going to get 4, or as we say here, 4 to 1. So we have $4 of current assets available to pay off every $1 of current liability. So you have a 400% coverage. All right, cool. Scrolling down now. Yeah, all right. All right, bottom left-hand side, number 23. Partnerships are formed for the purpose of combining capital from different persons. Yes. Benefiting from different skills and specializations. Yes. Sharing ideas, experience, and responsibility. Yes. So all three. Oh, sorry. I forgot to change back the weight on the point. To the thing. Right. Across here, what is the total amount for assets? So we have a table. Now, which of these items are assets? Motor vehicles, receivables, and building. 2 and 2 is 4 and 10 is 14. Okay, so that's that page, 21 to 26. All right. Hellboy, correct. Okay, in class, people, are we good with those items on this page? All right. Any questions at all? All right. All right, so Ayaz, Jordan, Marcus, Noah, Talia, Tino, and Yuri. If you guys are good, kindly give me a quick G chat, please, and thanks. All right. All right, cool. There you go again. 27 now. All right, let's see what we could do here. 27, 28. Right, so a standing order of $25 for insurance appears in the debit column of the bank statement. This amount doesn't appear in the cash book. How is this item treated in order to update the cash book? Right, a standing order is a payment that is automated. So it comes out automatically from the bank account. Right, so what is your thoughts on AdMasters here? Actually, Ichika, I was watching that this morning, South. It actually was a decent paper. They brought a couple of things they don't normally bring the way they bring it. But I think every exam should be a mix of easy, medium, and medium plus. If you knew your calculus and you knew your stats and probs, there was giveaway marks there. They brought the trig graphs. That I was surprised they brought the trig graphs. The proof actually wasn't hard. A lot of people don't remember that. You could do cos squared plus sine squared as 1, and you could then take 1 and express it as cos squared plus sine squared. And it was a perfect square. Numerator. The conversion to linear form for the other part, the log question, was interesting. I was surprised they brought logs twice. They brought it in the first question and later on too. Yeah, but no, overall it was a decent paper. You had a couple of odd items out that the slightly more advanced students would get. As I say, separate sheep from goat. Yeah, but Ichika, I'm not mad at it. Not as much as the PoA paper, but as a different story. Anyway, yeah, sorry, back to accounts, guys. Standing order is an automatic payment set up to come out of your bank without you having to actually physically do it. But it's a payment nonetheless. And usually what happens is it comes out of your bank account, and then only when you see your bank statement, you say, hey, this payment come out. So how will we put it in the cash book? We will credit our bank account, because credits to the bank account, cash book, sorry, are, what you call it? Payments, and it's a payment, right? Okay, item 28 refers to the following information. F. Taylor's terms of payment for all his debtors is 4% in 15 days. The following debtors pay within different times. 10 days, 18 days, and 15. Okay, so who's clearly out here? Pool. So any option with 2 is an incorrect option. And that's option A, C, and D. So the only option correct here is B. Right? So yeah. Right. Items 30 and 31 refer to the following statement of financial position provided for a firm as at 1 Jan 2022. Okay, so it's a balance sheet looking like a T account. On the right-hand side, you have bank, receivables, and inventory as your assets. On your left side, you have what? Liabilities and capital. So clearly, there's a liability, and this should probably be a capital. So if we add up 500 and 5,500, we get 6,000. This side also is supposed to add to 6,000 because it's a balance sheet. And assets must be equal to capital plus liabilities. Now, if we add the 3 and the 1, we get 4. How much more do we need to get 6? That's easy. We just need 2,000 more. Come on, man, Philip. Don't do that. Right. 2,000. And which of the following accounts is represented by 2? Well, that had to be capital because it's a balance sheet, right? Okay, cool. 6,000 minus 1,000. Which, yeah. Pretty, that's correct. Very good. Right, let's scroll down so we can see all of 32. All right, let's tackle sorry, 29 and 32. So how would the purchase of equipment on credit affect a firm's statement of financial position? All right, so if you buy equipment, what's going to happen to your assets? Increase or decrease? Yeah, asset goes up. And if you buy it on credit, did you pay for it or promise to pay for it in the future? Right, which means you owe money for it, which means your liability going up. So you have to increase both of them. Sure, you see which particular thing you're in there. 31, 29, talk to me. Right. 30 was 2,000, right? Okay, 32, what was the cost of goods sold by Mrs. Martin? So Mrs. Martin's cost of goods sold is your opening inventory plus your purchases and minus your closing inventory, right? Sales and sundry have nothing to do with cost of sales. So 7,000 plus the 4,000, 11,000, and you're minusing the 3,400. That's 7,600. So that's option D. Increase asset. Up. Yeah, that's correct, Pretty. Let me see here. Let me see here. All right. Okay. All right, that's it for this page, guys. So we halfway through the paper in about half an hour. That's pretty good time. Now, of course, you guys might not move as fast as me in the actual exam, and that's okay, right? Now you have 90 minutes and 60 questions, so that's a minute and a half per question, right? So monitor yourself, monitor your time. You're likely to, Shirisia, you understand? Okay, cool, yeah. All right, Google Meet, right? If you guys are good with the stuff on this page, give me a quick G in the chat. If you need me to re-explain any, many, or all, give me a R and give me the numbers. 30? Yeah, no problem. Right. So it's a balance sheet, but in a kind of horizontal format, right? On the left hand side, sorry, we have assets. We have bank, receivables, and inventory, right? On the right hand side, well, assets equal to what? Capital plus liabilities. Payables is a liability. So this item had to be capital. Now, if you add 500 and 5,500, we get 6,000. And that has to be the total here as well. The items you have of the bank and the inventory add up to what? Right? 3,000 plus 1 is 4. How much more do we need to get 6? 2,000, yeah? All right, cool. All right. Okay. Here at grocery, use the order of permanence, right? Method to prepare its balance sheet. So the funny part is they change the ones that say balance sheet to statement of financial position, but they couldn't change profit and loss to income statement. Anyhow, all right, which of the following lists in the correct sequence based on permanence? So permanence means long lasting, right? The opposite of liquidity. So the furthest from cash, right? Or the hardest to convert to cash. So land is always the least liquid or the most permanent, right? So land is the first option in A and D, right? In option B, land is last. So that one is definitely not correct at all. In option C, land is second to last. So no way. Now building is usually second, right? A building is usually more permanent than machinery or motor vehicle. So option A is the best answer here, all right? Which of the following features is associated with private limited companies? Family owned could be. Financial statements are published. No, we do not. They don't publish their statements, right? Public limited companies have an obligation, right? Pretty, that's correct, yes. Company shares are not sold publicly. That is correct. Yeah, company shares are not sold publicly in a private limited company. And government agencies may purchase shares. No, right? So, okay, a private limited company could be family owned, but that is not mandatory, right? The best answer here is C. Company shares are not sold publicly, right? You can't sell shares to the public at large. Only certain people are allowed to buy shares, right? Normally, I would say A. So Kelsey and Shirisia are not disagreeing with you. I'm just saying that C is the better answer in this particular situation, right? But normally, I would have put A. To be honest, I feel like option C is a new item they added here, so don't be too worried about it, right? So let's just read the options carefully. That's why I said normally I'd have stopped there. I'd be like, A is the answer, but I decided to read. So you see why reading is important, right? Yeah, 34. So not found in stock markets. Very good, pretty. Right, 37. Karen and we saw Karen and Garth yesterday, right? So we know the answer is D. Now, Karen and Garth are partners in a business, and they share profits and losses in the ratio 2-1. Right? Now, what do we do when we have numbers in a ratio? We add them. 2 plus 1 is equal to 3. And what do we then do? Take each of the numbers and put it over 3. So it's a 2/3, 1/3 split of 3,600, right? So for Karen, she'd get 2/3 of 3,600, and Garth would get 1/3 of the same 3,600. 1/3 of 36 is 1,200, and 2 times that is 24. So 24 going to Karen, and 1,200 going to Garth. Right? 37 is D, very good. Right, the matching concept directs a business to match the assets and liabilities? No. Debtors? No. Statement of financial position with the income statement? Who come up with this, boy? All right, and income for the period with expenses incurred. So income earned, if they wanted to be correct. Income earned for the period with the expenses incurred. Yeah, so 30 is also D. All right, my answer for, so sure you see 33. Land building. Answer was something 30. Which one? I just seen WAE. Yeah, I wouldn't put D, right? But 38 is D, right? I thought I was talking about Shirish. Okay, cool. Scrolling down now. All right, we have 35. In calculating gross profit percentage, gross profit should be divided by net sales. Yeah, gross profit. Now, markup, it will be gross profit divided. But when you see gross profit percentage or gross margin, that's net sales, right? Which of the following items are not recorded in the appropriation account? Interest on loans from partners. Interest on capital. Well, no, that is recorded there. Withdrawals, drawing. So, no, right. So, any item that option 2 is in is out, which is option A, C, and D, right? Now, this is very interesting because in the May 2024 paper and May 2019, there was an element in the paper 2 in the partnerships question where there was a loan from a partner and there was interest on the loan. I was taught that interest is an expense to the income statement, not an appropriation of profits. And that's how I've always taught it. Lo and behold, last year, the question pop up again. And all of a sudden, people say, no, the interest is an appropriation. Like, where you get that from? Right? And they couldn't tell me. They say, well, that's how they learn it. It's in a textbook where they cut it. And then we found it online for somebody teaching the IGCSE syllabus that they put it in the appropriation. But look at this question here, right? What does it say? It says it's obviously not there. All right, so that's how we'll treat it. Okay, 39. So item 39 refers to the following balances extracted from TC Limited's ledger. The working capital. So working capital is current assets minus current liabilities. Okay, so which items are current assets? Prepaid rent, inventory, bank overdraft, accounts payable, and insurance owing are all current liabilities. So if we add up the two current assets, we'll get 15,700. If we add up all the current liabilities, we'll get 2,400. Now again, if my arithmetic is off, please tell me. That's a 0, that's a 0, that's a 3. So 13,003, which is not, no, sorry, it's 23. It's 23. A good thing, boy. So 13,400. See why it's important to double check your work, ladies and gents? If they had a 13.3 and I put it out, I'd have done already. All right, cool. All right, in class, people, are we okay with the solution on this page? Any questions, anybody, anything? No? Okay. Google Meet, you all know the drill. If you guys are good with that, kindly give me a G in the chat. You need me to re-explain anything, give me a R, right? Any menu or everything, give me a R. And the numbers, of course. Yeah? All right, cool. We're going again. All right, guys, we're in the last 1/3 of the paper. Now, if you finish too early, you might have no choice but to do our next piece of our next paper. Let's see, before we jump the gun there. Okay, so Mr. A. Jones paid $250 in cash for repairs to machinery. The transaction was entered in the cash book and posted to the ledger. Sorry. The double entry would be, so if you're paying for repairs, your credit where the money is coming from and your debit where it's going. So it's coming from cash and going to pay for repairs. So you had a credit cash and debit repairs. So it should be option A. Redo 39. Yeah, sure, no problems. Right, so your working capital is your current assets minus current liabilities. Only these two items were current assets, totaling 15,007, right? And these items down here were all current liabilities, totaling 2,300, right? So 15,000 minus 23 is 13,004, right? Hope that helps maneuver. Right, cool. Right, back here. Which of the following formulae may be used to calculate cost of production, right? So prime cost plus overheads plus opening work in progress minus closing. So that's option D. Prime cost plus overhead plus opening work in progress minus closing. No, I'm a little zoomed out here. Big N, how are you doing, Big N? Okay, 42. What's 42 saying here now? All right, opening capital 3,000, drawings 500, net loss 1,500. What would be the closing capital? So it would be the opening capital, and you'll minus your drawings because it decreases capital, and you'll also minus your net loss. These two together are a decrease of 2,000, so you have a $1,000 value for closing capital. Under which of the following conditions would a trial balance still balance? A transaction was completely left out. Yes. Both a debit and credit entry were overstated by the same amount. Yes. Both a debit and credit entry were understated by the same amount. Yes. Okay, so all three are here. Right? So the transaction being completely left out is the error of omission, and the other two below are compensating errors. Sorry. Right. Hey, behave yourself. Right. A businessman offers a discount for prompt payment for goods purchased. Under which column in his three column cash flow could it be entered? That's discount allowed. Right? So a businessman offers discount, so he is allowing the discount. And it's a cash discount, that's discount allowed. Okay. All right, in class, people, I know we just finished a page, but are we good here? All right, cool. All right, Google Meet. You guys know the drill? If you're good with that, give me a quick G in the chat. All right, cool. Sorry. All right, cool, there we go. Right, the acid test ratio indicates that current liabilities can be paid by net current assets less inventory that is available. Yep. Right, so no, not so current assets alone would be current ratio, and overdraft that can be secured. No. Yeah. Then you have non-current assets, totally wrong set of assets. So the only viable option here is option D. 46. Which of the following obligations would normally be considered or classified as a non-current liability? Right? So non-current meaning It takes more than 1 year to pay it back. So that's debentures. Right? Creditors, accrued wages, and overdrafts all are usually classified as current liabilities, meaning we have to pay them back within 1 year or less. Right. Item 47 refers, okay, we have an insurance account. Let's take a look and analyze the items inside this insurance account. We have an opening. Oops, sorry, that was not supposed to happen. Right. Right, we have an opening debit balance. That indicates a prepaid insurance coming in because it's the start of the year too. We paid some more money towards it. So, okay. Yeah. Yeah. Right. The profit and loss transfer or income statement transfer. That's the amount actually incurred in respect of insurance. And then this much, sorry. Yeah, this figure here will be brought down the debit side, which implies it's still a prepayment. Yeah, so what is the amount of insurance prepaid at the end of the year? That's 600. Right, credit sales to J King was debited to A King. This is an error of commission. All right, original entry means the wrong figure was used for double entry. Complete reversal means you reverse the debits and credits. And principal is where you have the wrong class of account. So you bought a motor vehicle, but you debited motor repairs or motor expenses. Or you paid for, let's say, vehicle maintenance, but you debited motor vehicles, right? All right, cool. What time is? Boy, 10:20, we actually started going through the paper. Yeah. All right. Okay. Guys, that's it for this page. So in class, people, are we okay with 45 to 48? Yeah. All right. Google Meet, you know the drill. If you're good with that, give me a quick Uni chat. If you have any questions, let me know. Please answer. I don't mind answering questions if you need me to do so. All right. Thank you, Jordan. All right. Now, if you guys have questions, let me know. You can always just WhatsApp me directly if you have my number, which you'll do. Okay, cool. Okay, Mrs. Hoyt, a grocer, bought a computer on credit from Tan Company. In Miss Hoyt's books, which of the following journal entries will be made for this transaction? So if you bought a computer as an asset, in a debit computer, because assets, when they increase, you record about a debit. So AID, right, Paige? Aid, right? Assets increase. So you had a debit computer, and you're not paying for it, right? You're buying it on credit from Tan Company, which means you owe Tan Company money. That's a liability, which has to be credited when it's increasing. Right? Debit computer, because the asset is going up, and credit Tan Company, because that liability is going up as well. Okay, item 50. Go to the question, right? You have the total factory overhead for Maxwell. Okay, factory overhead. So Maxwell, sorry. Yeah. Item 50 refers to the following information provided by Maxwell Manufacturing Company. Okay, cool. Office staff salaries. So office means that's non-manufacturing. So this is out. Factory rent, factory utilities, delivery expenses. Nope. Sorry, no. Depreciation of delivery vehicle. Nope. Depreciation of factory machinery. Yep. So we're going to add those three items there. 500 and 850 is 1350 plus 925 is 2275. Right? Please feel free to double check my arithmetic. Right. 51. Which of the following entries would not appear in the cash book? Goods sold on credit. Right? The cash book is only for cash and bank transactions, actual cash or check payments, and actual money received by cash or check. So payment for goods, yes. Goods bought for cash, yes. Check received for goods, yes. Goods sold on credit, no. All right, okay. So there were only a couple of questions on this page, guys. So are we okay with this page? All right, Google Meet, you know the drill. Give me a Genie chat if you're good with that. You need me to re-explain any menu, everything. Any, all, any, okay. All right, thanks for the feedback, guys. All right, going again. The net profit of a firm was shown as 1,600. It was later discovered that the discounts received were undercast and purchases was also understated. What is the correct net profit? Okay, cool. So your net profit before any corrections is 1,600. Discounts received as a revenue. If it's undercast, is it too high or too low? Too low. When a revenue is too low, what effect would that have on profit? Would profit be also too low or too high? Too low. So when you fix the error and the revenue goes up, so too does profit. Purchases, on the other hand, was understated. Now, understated is has the same meaning. It's too low. But is purchases a revenue or an expense? An expense. Now, if an expense is too low, it means we didn't subtract enough in the calculation of net profit, which means if it didn't subtract enough, net profit is too high. So when you fix the error in the expense by increasing the expense, profit going to go down. So I believe that's 1574 when you run the numbers, right? Sorry, give me 1 sec. See what this dog singing about outside here. Real singing boy. All right. Okay. Jacko Limited sells canned tomato sauce. The following inventory information was available for the month ended that. Next FIFO, why we have, well, then again, I was going to ask why we have a FIFO question in a kind of random place here, but nothing really seems structured about this entire paper. Or volume, Shania. It seems pretty high there. 1 second, Shania. I can't go too loud because it'll cause some feedback and echo and everything, right? So hope that's better. All right. Okay. Right. Beginning inventory, purchase, sale, sale. Under the FIFO method. So FIFO means first in, first out. Sorry. Okay. Okay. So we started with 40 cans. We bought 80 more. So 40 plus 80 is 120. We sold a total of 110. So if you consider these two, we're only going to have 10 cans left. Now, under FIFO, you sell from the first batch first. So that entire batch of 40 is going to go first. And then they're going to sell how many ever is left from the last batch here, right? Now, what that means is that the 10 cans that remain will have to come from that batch. So that's 10 at 5.15 each. Sorry. So that's 51.50. Shania, let me know how much volume going there now, please, and thanks. Okay, 54 refers to the following information for MD Limited. So what are total indirect costs? So indirect costs are factory costs that are not direct or prime. So factory rent, depreciation on factory equipment, factory insurance, salesman commission, nope, and lubricants for factory machinery, yeah. 2 and 7 is 9, 9 plus 6 is 15, 15,500 as option A. Sorry. When a company declares a dividend of 15%, the dividend warrant of a shareholder owning $1,501 ordinary shares is, right? Okay. So it's a 15% dividend by 1,500 by 1, right? Because it's 1,500 shares at $1 each, right? So that's 225. Right. That's that page there. Right. One more page to go. In class people, sorry, Jordan, could you explain which one, Jordan? The very last one then? Number 55? Yeah, all right. So, right, the dividend. So a company declares a dividend of 15%. Right. So what that means is that they're going to pay the investors a 15% return on their investment. And you have a shareholder, one person, and that person has $1,501 ordinary shares. So the value of that person's investment is 1,500 shares by $1 each, which is exactly 1,500. So sorry, dollars. So the dividend on that on the 1,500 shares will be 15% of 1,500. All right, so you'll have 15 over 100 by 1,500. Right. Knock off the zeros, and 15 by 15 is 225. Oh, 53. Sorry. Oh, the 5. Oh, okay, cool. Yeah, no problem. All right. So check it. You have a batch of 40, you have a batch of 80. You sell 100 first. Now, check it. Under FIFO, so this batch 1 and this batch 2. So under FIFO, you had to sell from the first batch first. Now, obviously, 40 is less than 100. So what's going to happen is this whole batch is going to get used up. And they still have 60 left to sell to make up the whole 100. So you're going to pull 60 from here, and you're going to be left with 20. All right? So that's after the first sale. On the 20th now, they sell the next 10. So that could only come from what you have left. 20 minus 10 is 10. Right? So you have 10 units left from the second batch. And 10 by 515 is 5150. Right? So I hope that helps, John. You can let me know. All right? All right, no problem. Right. All right, last page, guys. So let's see what we could. Whoa, what's going on here? All right. Okay. Item 56 refers to the following assets. Sorry, 1 second. Cool. Yeah, sorry. So item 56 refers to that cash at bank, inventory, payables. So which of the following is Mr. Jones's capital amount? So as we know, capital is equal to assets minus liabilities. So which of the items there are assets, right? Cash at bank, inventory, receivables, and cash in hand. So 8 and 4 is 12. 12 and that is 1625. Plus that is 2125. Right. And then, well, they have payables and overdraft are both liabilities. So that's 850. Did I miss something here? Hold on. 8 and 4 is 12. That's 13. Oh, that's, wow. Okay, how I got that way? 13 and 5 is 1825. Right. So that's that. So yeah, 975. Wow. Okay, that's D. Uh, 58. So top right hand side. So Teresha Ali, an employee of the bank, monthly salary over time income tax rate, 25% on every dollar above $2,000 of monthly salary and 30% of overtime earned. Total income tax to be deducted from her salary is, okay, so 25% on every dollar above 2,000 on the monthly. So she makes 3,500. If you take out the first 2,000 on which no tax is paid, you're going to be left with $1,500. And you're paying 25% on that. So that's 375. Again, please feel free to use your calculator to double check over. And then the overtime, you just need 30% of that, which is 240. And when you add these two, you're going to get 615. I missed 57. I'm going on it. Yeah, man, Big N. Thank you very much. Yeah, Big N, you hear me? Okay, I know Shania, so the volume is kind of low. That's because usually my mic across on this side, but the screen across here. So let's have a little kind of disparity. Okay, an asset purchased for $1,000 depreciates at the rate of 10% per annum using the reducing balance method. What is the book value of the asset at the beginning of the third year? So every year, the asset is losing 10%. So in year one, the asset loses 10%. Now 10% of 1,000 is 100. So at the end of year one and the start of year two, you have a value of 900. In year two, you're also losing 10%, but now it's 10% of 900. So that's 90. 90 from 900 is 810. And as you started the third year. Can I go over 58 or the income tax? All right, no problem. You're hearing, a little soft, but good. All right, cool. 57 is B. Yeah. Okay, right. I'll go back up to 58 just now, right? So 59. An increase in the provision for bad debts will be added to sales. No. Subtracted from sales. No. Included as an expense. Yes. An increase in the provision for bad debts is included as an expense. The rent expense account was overcast by 20. The journal entry. Okay, so what does overcast mean? Too high. So rent is too high. So to fix that, we have to decrease it. Now it's an expense. Do we debit or credit to decrease an expense? Credit. All right. So we're supposed to credit rent and debit suspense. That's option C here. It's the only option that says credit rent. So even if you didn't know what the debit was, then that's the only option you have there. All right. Before let me just go back over 58. Okay, so right. Right. So Teresha earns this much money, and the income tax rate is 25% on every dollar above 2,000 of monthly salary. Right. Teresha earns 3,500 of monthly salary. If you take out 2,000, right, you're going to be left with 1,500. So that's the amount on which you find the 25%. Right. As a quarter, 750. So that's 375. Right. And then on the overtime is 30%, right? The 30% will give us 240. And the sum of those two is 615. Right? So I hope that for the asked 58. Yeah, right. All right. All right. In class, people, are we okay with this page? All right. Google Meet, no drill. If you guys are good with that, just give me a quick Genie chat, please, and thanks. Cool. All right. Okay, folks, that's the end of the paper I had planned for today. Him a question. You all want to start the next paper one time, or you all done? All right. Okay. All right. So, folks, yeah, we go until 12. So here what to do. Just give me 2 minutes to just kind of get some water and then I'll come back. What we doing, boy? The Jan 24? Seeing as we have Jan 25 and the May 24. Or y'all want to do which one? Somebody in the YouTube chat gave it to me. Yeah. I mentioned it having like, so here it is. Like, okay, thanks. I, right. Next paper. All right, cool. Okay, so right, we hold in the big papers for not tomorrow, for Monday as the Jan 24, May 24, Jan 25. So we did the 2023. So 2022. All right, cool. Why not? So do I have that clear? Oh, I don't like this. Hold on. But this paper they're not bad. It just where is that? Where's that in? Okay, hold on. Not today. May 22 and 28, so maybe not. What about Jan? Jan is nice. Did I not copy the damn thing? Oh no, that's not what it is. Fresh print out. Yeah, nah, I am printing this one. This one too ink expensive. Right. Okay, anything, right? Guys, the the May 2022 has this kind of grayish thing. It's gonna use up too much of my ink. So I don't want to really print it out. So you want to go to the board? Yeah? Alright, cool. Right. Sherry said, do you email these to your students with the answers? Yes, I do. I email a copy of the paper that we did, and a link to the replay. All right. Well, I mean, the exam is Tuesday. All right, guys. Okay, so we speed running. All right, cool. Let me see. Can we do a paper in half an hour? I don't know. Let's try. All right, so we saw this one just now, right? The main internal uses of accounting are managers. A businessman offers a discount for prompt payment of goods purchased. We know that's discount allowed, right? Finish with the question. Under which column in this 3-column cash book would it be entered? Discount allowed. Cool. Question 3. Which of the following best describes the double entry system of accounting? A ledger account must have 2 sides. No. An account must be written twice. No. Each transaction written in 2 subsidiary books. What does that even mean? Each transaction must have a debit entry, credit entry. Down. Boom. During the year, company bought stationery. Okay, so we did see this, right? They bought 220 and used 120. What figure would be posted to the income statement? Hey, they use the income statement in an earlier paper to represent the expenditure for stationery. That's 120, right? So you use 120, that's the expenditure part. All right, which of the following? Sorry, 1 second, somebody's calling me. Hello, good day. This is he speaking. How can I help? I'm in a class right now, actually. We finish at about 12, so I would say about maybe 12:15 when I kind of wrap up and everybody leave. Rampasad? Okay, cool. No problem. I look forward to your call. Okay. Right. Which of the following lists of activities shows the correct order of the stages in the accounting cycle before final account. So we saw this one already too. So we know journals is first, so A and B are out. Trial balance is the third one, posting is second, so option C. All right. Can you email it to me, please, if you don't mind? Sharice, here, email me first. I don't want you to put your email here. Next thing you guys say that's spam. Right. We could discuss that then. Right, guys. Which of the following lists of current assets is original order of liquidity? Now, the previous paper we had order of permanence. Yesterday we had liquidity. Liquidity starts with cash. And only one item here starts with cash. So we don't even have to worry about the rest of them. Cash then bank. Receivables, it's inventory last. That's correct. Cool. Next, what is the total of the trial balance? Okay, so the trial balance has two columns, a debit column and a credit column. In the debit column, you're going to have what? Assets, expenses, drawings, right? So you have your machinery, inventory, purchases. That's assets and expenses. Sales is a revenue or an income, and capital is just capital, right? So these two would be on the credit side. These three would be on the debit side. So if we add 4, 3, and 1, we get 8. And if we add 5 and 3, we also get 8. Okay, cool. All right, there you go. Okay, Google Meet. As you know, I kind of speed running here. But if you guys have any questions, now is a good time to come up. Give me an R if you need me to give me. If you need to give me an R, and give me the number, right? If not, let's go to page 2. Good. All right. Cool. All right. Okay. On the 1st of January 2021, 10,000 was paid towards an advertising campaign. Of this amount, 7,000 was used by the 31st of December 2021. What was the amount prepaid for advertising by the end of the year? Well, that's just the difference. If you paid 10,000 at the start and you use up 7,000, you have 3,000 left as a prepayment, right? 10 minus 7 is 3. 9. Assets. So the assets here are motor vehicles, receivables, and building. So 2 and 2 is 4, 4 and 10 is 14. And if you add the payables and capital, that's like capital plus liability, right? 11 and 3 is also 14. So we're okay with that. A businessman bought a new computer for $6. Okay, we saw this yesterday. So we had a debit new computer for 6. There's only one option that does that, which is option D. Right? So he paid 4,000 in cash. So you could, if you want to look for like a credit to cash for 4,000, you could cross-check with that. And that is also the only option that has that as well. 11. Foster and Scott Boy. What was the capital? So capital is total assets minus total liabilities. So assets here, that's 300,000. Liabilities here, that's 210. 300 minus 210 is 90. All right, cool. All right, we okay with this page, guys? Yeah? All right, Google Meet, you know what to do? All right. Going again. Right, credit notes issued for goods returned by a customer would first be entered in the returns in what's book. Goods returned by a customer is returns in what's first place it goes, returns in what's journal. In order to avoid writing numerous checks for a small amount, we saw this just now, right? The firm will set up a petty cash fund. Asset test ratio, we saw this one just now too, right? The net current assets less inventory available to pay current liabilities. Yes. Which of the following is not nominal? Furniture. Furniture is a real account. A nominal account is revenue or expense. Commission could be either carriage inwards and discount on both expenses. Furniture is an asset. Assets are not nominal. Okay. Closing balance of the bank. We saw this just now, right? 20 plus 2 is 22. 22 minus 15 is 7. right? So money comes in on the debit side, you have 22 there. Money goes out on the credit side, you have 15 there. 22 minus 15 is 7. Hey, look, R. Stevens again, boy. Right? So we know it's all right. So float is that 350. He spends 320. He wants it to go up to 400. Right. So that's 370. Right? If you spend 320 out of 350, you have 30 left. And if you want to go from that to 400, then you're going to need $370 more. Right. Okay. There, guys. So again, if you have so Google Meet, if you guys have any requests for re-explanation, give me an R. If you have G's, you can send them too, but more importantly, the R's. Yeah. Folks in the corner, we okay with this page? All right, going again. Okay, what is the total provision for doubtful debts? Right, so we have to multiply going across and then add going down. So you have 6,000 by 3%, that's 180. 4,000 by 2%, that's 80. 8,000 by 1% is also 80. That's a total of 340. All right, 1 second. Huh? All right. Which of the following items on a statement of financial position would differ most in the presentation when comparing the books of a company and a sole trader? Capital. Mr. Ram, a shoemaker, bought a motor van for 11,000 in cash. In this, well, we saw this just now, right? Debit, motor van, credit, cash. Debit, motor van, credit, cash, right? That's option A. Yeah. 21, in Mrs. Lowe's ledger, right? An entry on the debit side of the drawings account and an entry on the credit side of the bank account. Okay, so your debit drawings when you are withdrawing any asset, and you credit the asset that you are withdrawing from. If you're crediting bank, it means Mrs. Lowe is taking money out of the bank for her personal use. That's option C. Mrs. Lowe withdraws money from the bank. No, sorry. Option D, personal use. Wow. See why it's important to read carefully, especially if you're going fast. Right. Okay. The ABC company received a check from Mr. Murray for 300. How must this transaction be recorded in ABC's book? Okay. So your credit where it's coming from, debit where it's going. Your credit Murray and your debit bank. That's 2 and 3. That's option C. Right? Debit bank, credit Murray. Okay. Next, an asset purchased for 1,000 is depreciated at a rate of 10%. Reducing balance. What was the book value? Oh, we just did this question, right? So you have 1,000. Right? You have 1,000. You're losing 10% in the first year, which is 100. That means you have 900 left at the start of year 2. You're losing 10% there again, which in this case is 90. You're left with 810. That's the value at the start of year 3. So there you go. So 810. Okay. Just saw that one here. Right. Okay. Item 24 refers to the following information. A calculation to determine gross profit percentage is as follows. What does the 529,800 represent? That's net sales. Well, it should say net sales. We don't have that here, so it's total sales. Right? Gross profit percentage is also called gross margin. That'll be gross profit over your net sales by 100, right? So the 185,530 is the gross profit. Item 25 refers, okay, we saw this yesterday, right? A public limited company issued a prospectus offering the shares described in the following table for sale at a par value, right? Type of share, ordinary, and then 5%. So the issue was fully subscribed. That means that all the shares being offered were bought and paid for. How much capital did the company raise? Okay, so if you sold 200,000 shares at a par value of $2, when you multiply, you get the total money coming in from the ordinary shares. And same with the preference shares. 10,000 by 5 will give us 50,000. And the sum of 400,000 and 50,000 is literally 450,000. Sorry, I see. Yeah, a lot of these questions repeated. That's correct. Sorry, TJ. I was focusing on the new boy. Sorry. Yeah, I'm sure you were correct though. Yeah. Okay. So that's 450, right? 450. Right. 26. In preparing its final accounts, a business omitted returns inwards. Which of the following would be okay? So returns inwards is like the second item in the income statement. It's subtracted from sales to give you net sales, right? It doesn't affect net purchases at all, And obviously, it would affect the gross profit or loss, seeing as gross profit or loss is net sales minus cost of goods sold. And if net sales is off, gross profit would be as well. So the only item it wouldn't affect is item 2. And the only item without item 2 is option B, 1 and 3. 1 second, eh? Cool. All right, a business receives $5,000 for rent and deposits this amount into its bank account. How will this transaction be recorded? Okay, so money's coming from rent and going to bank. So you credit where it's coming from and you debit where it's going. Credit rent, debit bank. So debit bank, credit rent, same thing. Item, Miss Allen, Brown, and Cable Boy. So Allen invested 20,000, Brown and Cable 5,000. The loss sustained during the year was 1,000. The partnership agreement is silent on the item of losses, although profits are to be split in a ratio 2 to 2 to 1. Now, this is where they catch plenty people, because the profit sharing ratio is more accurately called the profit and loss sharing ratio. Oh, sorry, TJ, 200, where boy? Which one, boy, TJ? Which number? For the same one? Okay. Big N2? All right. How much of the loss must be borne by Mr. Cable? So Allen, Brown, and Cable. Allen, Brown, and Cable. Right. So it's 2 to 2 to 1. So what do we do with the numbers in the ratio? We add them together. 2 plus 2 plus 1 is 5. Mr. Brown would be 2/5 by the 1,000. That gives us 400. All right. Okay. Yeah. So this one was D. Okay. Okay, guys, are we okay with this one here? All right. All right. Google Meet. You know the drill. Oh, TJ, thanks for the 9 roses, boy. I appreciate it. That's very generous of you. Going again. All right. So we almost halfway through the paper. Depreciation in accounting terms can be defined as the increase in value of an asset. No. Money saved to replace non-currents. No. Cost of using a non-current asset for an accounting period. Yeah, that one. Straight line method or reducing, but no. That's the best answer then. So the cable ratio is 1, isn't it? 200. Which one? Which number again? Which number? Tell me the number. Oh, wait, it's cable. Oh, shucks. Guys. Sorry. Big N. Thank you very much. And TG. Sorry, yeah. So Allen, Brown, and I don't know why I think Brown, no. 2 to 2 to 1. So when you add it together, you get 5. And you put in the 1 over the 5. And you multiply it by the 1,000. No, you guys are correct. Sorry about that. So you see, I'm not perfect. So B is correct. All right. Yes, Sharice, you're correct. My bad. Yeah, guys, sorry about that. Okay, item 30 now. Right, refers to the following information. What is the production cost of goods manufactured? Okay, so cost of raw materials consumed plus the wages plus the royalties will give you prime cost, right? Indirect wages, yes. Machine depreciation, yes. General factory expenses, yes. So the only one here that's under question is the indirect wages. Oh, sorry. 1 second. Okay. Okay, sorry guys, just wife yo. Okay, all right, no problems. Well bonded then, right? Good. All right, guys. Sorry. Let's see if we can get this down. So 2 and 4 is so 6 and 4 is 1200. 1200 and that is 9. 9 is 18, 18 is 69. So it's either rent and taxes, boy. Yeah, man, Monday. Right, yeah. So this is the one here that's under question. Because it could be factory rent and taxes, but it didn't say factory. All right, so this one I had to find out about. So I would say the option here is it's either 39 or 40. I'll go with 40 for now. Well, let me send a picture. Hey, Nigel, morning. This is from the May 2022 paper, question 30. So all of the other items we know are like factory related. So rent and taxes is the only one in the table not specifically labeled factory. So the question I have is, what do we do? Right? Because I mean, I'm sure that the factory will take some portion rent and probably taxes as well. But yeah, so do we just add it to be safe, or is there some rationale for not leaving it? Sorry, not adding it. Thanks. Okay, let me just close the door and let's see if we can finish off. All right, 31. Let's take a look. Nope. All right. The following information relates to a privately managed charity. Accumulated funds, that's capital for them. OPEX, income, income, income. What is the charity's accumulated fund at the end of the year? Okay, so it's like capital, right? It's you add your profits, you minus your losses, right? If we add these three things together, right, that's going to give us 9,000. If you subtract that, you get 8,000. And then you're going to add those two things. I don't feel like this should be common knowledge. Sharida, working capital. Working capital is current assets minus current liabilities. So current asset, current asset, current liability, current liability. Okay, so 3,500 plus 300 is 3,800. 12 and that's 14, that's 1,800. That's 2,000. All right, okay. So that's this page. Let's see if we get to at least 40 now. 2/3 of a paper isn't bad at all. All right, amount of drawings. What? Hold on. Sorry, let's do 36 first. Now. If cash sales were not entered in the books, this would be an error of omission. All right. The amount of drawings is, okay, calculation time. So opening capital, add this. So 75 plus the 25 plus the 10 minus the drawings will give us 80. 75 and 25 is 100. 100 plus 10 is 110. To get to 80 from 110, you have to minus 30. So drawings has to be 30. Right, Peter Smith worked for 44 hours last week. The rates are $3.50 per hour for a 40-hour week, time and a half for overtime. What was his gross income? Okay. Right, so 40 hours by 350 as 120, as 140, I believe. And then we have 4 hours by the same 350, but by time and a half. 21. So that's 161. All right. All right, 37. The following table shows the balances of the asset accounts at the Bureau Club as at 30th June 2021. Right, so you have, from what do you want? The accumulated fund. Okay, so accumulated fund is basically capital, which is assets minus liabilities. Now, premises, equipment, furniture, bank and cash and inventory are all assets, right? So the only logical answer here is option D. And I'll tell you why, because if you look at the units column, 5 and 2 is 7. And obviously it can't be 4,004 because this food item is already 5,004. So yeah, 98, 97. 38, a company's rent account and an opening debit balance of that. Okay, we have to get a T account going here so we could see what's going on. Opening debit balance of 2,000, right? 6,000 was paid in respect of rent. And there was a closing debit balance of 50, right? So we clearly need 6,500 here. There, guys. Okay, going again. Right, 38, 39, following table, traders operation, right? What do I want? Cost of goods sold. So cost of goods sold is the opening stock plus the purchases minus the returns out, or purchases returns. We would add carriage in if there was, and we minus the closing stock. The inventory at start is 98.50. Purchases is 52,640. And you're subtracting returns out of 762 and closing stock of 11,075. So 52 and 9 is 61. That's 62.4. Okay, cool. That's already 18. No, sorry, that's not. That's 62. That's 51. Okay, so 51. 62 minus 11 is 51, yeah. Right, so option B. That's just some short maths there. Because 5 and 2 is 7. 7 from that will be 3. Anyhow, gross profit. So your gross profit is your sales minus your sales returns, right? So net sales. Right. Right. So that's 80. Okay. All right. So that's 82 minus 50 is 32. So 31 something. Yeah, I'm guessing. A. 82 minus 50. 82 300. Yeah. Yeah. Okay. I could live with that. Yeah, guys. Obviously, if you have a calculator, you can work it out. I just kind of speed running through here to see how much of this I could finish in the next 5 minutes. Yeah, so we mightn't get through the whole paper, but I mean, we got through most of it. Mr. A. Jones paid $250 in cash for repairs to machinery. Okay, we know this already. Debit machinery, repairs and credit cash. Right. What is the value of inventory? So here, okay, in this case, you just have to multiply and then add. $100 by 60 is 6,000. And that's 8,000 there. That is 420. 3/4 of that is what? A quarter is what? 21 batteries and that's 630. Or 6,300? 8,400. That's 21, 6,300. Okay, cool. 4,200. Right, so that's 10,005, 16,5, 24,5. 24,5 is D. Right, what was his profit? So Miguel's capital at the start was 40,000. And then at the end was 85. And he withdrew 1,000 for drawings. So what was the net profit? So 40 minus 1 is 39, and we need 46 to get to 85. Which of the following items are examples of current liabilities? So mortgage is non-current, and mortgage, and item 1 is in A, B, and D. C is the only correct answer here. Which of the following entries in a 3-column cash book are contra? So you had a credit, cash, and debit bank, or vice versa. Credit, cash, or debit, cash, credit bank. That's fine. W, X, Y, and Z are partners, sharing profits and losses in proportion to their capital balances. So they bring this one every now and again. So yeah, so the capital balances are, so let's say the first digits, right? Because they're all in hundreds, right? So it's a 3 to 2 to 1 to 3. If you add up those numbers, you get 9. So it's a 3 ninths, 2 ninths, 1 ninth, and 3 ninths split. What would be Z's share of that profit? That would be 3 ninths, or 1/3 of 7,200, right? That's 2,400. Right, which of the following accounts shows how profits and losses are shared among partners? Appropriation. K-Can, right? So we saw K-Can a bit earlier today, did we? Or was it yesterday? I feel like it was yesterday. Okay, right. Who's this person? Do I know you? Sorry, just give me a second. On right, sorry, K-Can settles his debt of 120. So therefore, so in the books of A and B, you had a credit K-Can for 120. So that's either C or D. All right. And then you're going to debit bank 117 and credit discount allowed 3. Right. There you go. Right. So I think we'll be able to finish this page and then call it George. According to the Partnership Act, if there's no deed of partnership, the amount of profit to be received by each partner is an equal share. What is the inventory at the end of January? Okay, so inventory at start is 1,500. We bought 1,200 more, so that's 2,700. I have to minus the closing stock to get to 1,400. The missing figure there is 1,300. Rose contributed 7. We saw Rose yesterday. 7,000 in cash and a motor vehicle with 3,000. Rose's contribution will be recorded by. Okay, so we have to debit cash 7,000, credit motor vehicle 3, and that's only an option C. You'd credit Rose for the full 10 because her total contribution was 10. Sorry. You said maths, Chris, you're a boss. I'm on lunch break when my physics crash because of your accounts. Mr. David, Mr. Terry David, I am humble, sir. Thank you very much for the compliment. You are very much prolific in your own right. Yeah. My students say hi. They watch your videos as well. All right. So I hope you heard my response. I was kind of focusing on my work there because we're trying to finish at 12, but it's at 12 now. But we'll see what's going on. So yeah, you keep up the good work too. I myself am a maths and art maths fan as well. So I might be putting on some of that content too. But like before the accounts, boy, maybe one day we could do a little something. Anyhow, have a good day. Oh yeah, Terry says hi, everyone. Yeah. Which exam? All? Which ones you have left? All paper ones? Yeah. Terry, they asked me if you have any paper one stuff. Yeah, sure. Yeah, man. So one day. All right. When a company declares a dividend of 15%, the dividend warrant of a shareholder owning 1,500 one. Right. So we did this question in the previous paper, right? So again, it's 15% of. Come on, man, Philip. Yeah. We're going. Go on. Oh, right. It's 15% of the value of the investment, right? The value of the investment is the number of shares multiplied by the par value per share. So we're just going to get 15% of 1,500, which is 225, yeah? All right, 52. A photocopier machine valued at 5,000 is depreciated by 10% using the straight line method. What is its book value after 2 years? Right, so under the straight line method, the same amount for depreciation is charged every year, right? So 10% of 5,000 is what? 500, right? And after 2 years, the total value of depreciation will be what? 1,000. So if you take your 5,000 and you minus your 1,000, we end up with 4. That is the book value, right? Net book value. All right. Good. All right. Can I speed run it? Behave yourself, man. The rest of this. Are they outside for you guys? Do you know? We have like 8 questions to go. You think we could just hold on for 5 minutes? An increase in the provision for doubtful debts will be right. So we did this in the previous paper just now, right? Included as an expense in the profit and loss. Yeah. What is the maximum capital a company can raise from selling shares to the public? Authorized share capital. Which of the following entries would not appear in the capital? We saw this in the previous paper, goods sold on credit, right? Which of the following will result when opening inventories are added to net purchases that is available for use? Okay, what is, didn't we do Sharita in the previous paper? Right, so the current ratio is what? Current assets divided by current liabilities, yeah? Okay, so cash is a current asset, prepaid insurance is also a current asset, rent owing, payables, and bank overdraft are liabilities. So 3,500 plus 300 is 3,800. 2 and 12 is 14, 14 and 4 is 1,800. So that's like 19 over 9. That's 2 point something. So yeah, 2.1. There you go. 2 and 1 ninth. 2.11111 recurring. Right, 58. Which of the following items is not considered a source document for payroll? Clock card, yes. Time card, yes. Register. So medical certificate. Right, a standing order. Right, so we saw a standing order in the previous. Was it the previous paper or did this question repeat in the paper? A standing order, right, as a payment taken straight out of our bank account and it appears on the bank statement. We wouldn't know about it, so hence our cash book wouldn't reflect it until we get the bank statement. And when we do that, we have to put it in. It's a payment, and as such, it goes on the credit side. Sorry. And J. Baines, boy, what is this? What is the cost of materials consumed? Right, so inventory of raw materials plus purchases. Less closing inventory, this figure here, so 2009. All right, guys, so again, 2 for the price of 1. So we did Jan 2023 and May 2022. Yesterday we did May 2023. On Monday, we're going to try and do 3 papers, all right? Jan 24, May 24, Jan 25. And we have 2 sessions, yeah, right? Unless you all want to come from 1 o'clock, but that's not necessary, right? We could do a 4 to 6 and a half, 6 to half as per usual, and then call it good. All right, and then we pick up with the maths about a week after. All right, what time Monday? 4 o'clock. 4 o'clock counts. All right, Google Meet. Yeah, I hope I didn't put off anybody with the speed run there, right? You could always go back and watch it, pause it, slow it down, message me, ask questions, right? Yeah, Lexi, no problem. All right, but Google Meet, I'll go on there. So Monday, 4 o'clock, we live and direct. right? 2 sessions, 4 to 6, half 6 to half 8. We do in the Jan and May 2024 and Jan 2025. I had email that fella back to give him a spot. Nickel, yeah, I had email Nickel back. Nickel. All right, Google Meet, I'll go there. I'll see you all there on the Monday. Bye. I see. 4 o'clock to 6 and then half 6 to half 8. All right. YouTube,